if you look at the volume that goes through on the Chinese spot price, people go there as, when it's an emergency and they don't have any supply locked in. But most people have got supply locked in at the moment, and prices are elevated compared to where the Chinese spot market is. The other risk around the Chinese spot market is...
Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Keith Della-Vedova is a representative and corporate manager at CPS Capital, which is a stockbroking and corporate finance firm located in Australia and operates across the globe. Now, Keith is a regular guest on the show, and we caught up to talk about all things lithium, including the recent activity with Liontown Resources, Gina Rinehart and Albemarle, the WA mining giants that are stepping in and why, Delta Lithium and Mineral Resources, Lithium and Africa, Azure Minerals, why oil and gas companies are getting into lithium, the Chinese lithium spot price, and lots more. Just a nice recap of some of the recent activity that's happening across the lithium sector. So hello, I'm Ben Kostrich, and this is the Market Bull podcast. Coming back for another appearance, a very fun regular of mine is Keith Della-Vedova from CPS Capital, a representative and corporate manager. Just got back from his travels recently, and whilst he was away, a hell of a lot has happened. I'm sure he was probably keeping on top of it all, but yeah, welcome back to the show, Keith.
Thanks. So hopefully it's just I'm a little bit more tanned. That's about it since I've gone and come back.
Well, as he was saying, went away, plenty of eating and drinking, and now it's back to, work, grinding and figuring out what's happening in these very exciting markets. But when we talked, I went back through some of our other discussions, and we'd almost highlighted some of the Liontown discussions in the lithium space. And I think we'll just focus today on a lot of what's actually unfolded. And if we want to start from the top, given that Liontown's commanding a fair bit of attention with Gina Rinehart coming in and pretty much out peppering the Albemarle bid, there's a fair bit of, what's going to happen there now, and what does that unfold for the rest of the space? So what are your thoughts initially on that whole development?
Yeah, I think I've been saying this to a lot of clients for a while now, is it's not more specific who or what company, but it's more about, if you look at the Hancock, if you look at the Min Resources, if you look at West Farmers, they're not allowing any, new competitors like Albemarle to take bigger projects themselves. They did that previously, and they don't, if you look at the Albemarle and Min Resources deal, that's kind of been, they've walked away from the processing. It seems like what you'd call the WA Resources mafia, putting their foot down and saying, this is ours. And it's strategic from them. They're not going in there. You look at ESS, you look at Liontown, you look at Delta as well, where Ellison's gone on the board. They're not going in there and taking these companies over right now, but what they are doing is making sure that they've got a future option over it. So all they're doing is going in there, creating blocking stakes and making sure that someone else doesn't come in there, accelerate the development, because what you've got to understand is these guys have already got existing mines that are producing. So if they flood the market, the price probably goes down, and they've got, worse negotiating power. So it's probably in their beneficial interest to slow down the constructions and control when these, new mines come online, benefit to them at the end of the day. So they've got a stake in how and when and what goes on. And I guess from, being from WA, it's not a bad thing to see your WA corporations doing the right thing and making sure it stays in the hands of WA companies of local interests at the end of the day. So, and I think it'll continue to go along like that. I think, as long as there's going to be a deficit, and, everyone talks about an oversupply and whatnot, it's not something that, is going to be achievable with all the delays and all the issues, capital cost blowout with new mines being brought online. Everything's always more expensive. Everything's always delayed. I've said that for every time I've been on this, and it's been proven true. And a lot of companies just, won't get up at the end of the day. There's a lot of optimism, people using higher prices, and development costs are quite large and blowing out. So some of these that have been factored into, being new supply coming online, they just won't make it. Yeah. So that'll leave a deficit, really.
Because it's one of those, it's almost happened all of a sudden. For the naive eye, you'd say suddenly there's Gina, there's Chris Ellison, there's no shortage of big players coming in and almost hoovering up or getting, as he said, a part of a stake in a company to stop potentially outsider interests coming in. But it's almost happened all of a sudden, but I just don't know if that's really necessarily the case. So how long do you think these discussions have been going on? I know that, Delta Lithium, for example, Chris Ellison moving in there now with almost 20% stake in that. I mean, what is going through their minds, and how long are these processes taking to get to where they are now?
They've probably just got an eye on them and waiting for someone else to make a move. With Liontown, you use that. Gina waited until the last moment for Albemarle to come in and say, this is our final bid. And then she comes in there and makes her move because she knows they're not going to pay more than that. So the share price is currently trading at 302 through at 303. So the market's telling us that there's either going to be another offer going through, or that, $3 is not really enough to secure this asset. And if Albemarle aren't going to go above $3, then
and they seem like they're quite enthusiastic and almost desperate in a way, given the amount of offers they've made on this project now as well.
Yeah, so they'll just walk away from this. I'm assuming that they probably won't come in for an improved bid. So it depends on the strategy. They've obviously got some high-level corporate advisors that are, putting to the majors. But you read Ellison's comment on this the other day. He goes, "We don't know. We just make it up as we go along." And it's a little bit like that, Someone else makes an offer and you go, "Oh, well, we don't want that to happen, so we'll go in there and do something." So it's, whilst there is some sort of strategy to it, it's not we're going to plan this company, that company, that company. It's just not really working like that. It's when other people make moves, that makes you make moves at the end of the day. Forces your hand. So that's kind of what's going on. And there's probably another one that, luckily for SQM being in Azure Minerals, which is another one that's gone from 30 cents and, the drill hits that they're coming out with in the widths. That's going to be a top 5, deposit in the world, a really good grade. And SQM's probably very lucky that they already hold an existing 20% and back those guys early. That they've got the mantle over that. I can't really imagine anyone else. And there was talks of a takeover at $3.40 or whatever. And, the stock's traded up towards $4. So you'd think it's the same thing here. $3.40 is probably not going to be enough to get that. And if you know the way their partner, Mark Creasy, who owns 40% of the project and I think around 15% of Azure as well, he won't really be letting anything go until he's got a bankable feasibility study out there. So they're going to have to either offer a significant amount or they're going to have to play the long waiting game with him, or he co-develops it with him. And he's got a pretty good track record of extracting the maximum value from his opportunities. I don't think he's made enough money in his lifetime. So
well, he keeps going. And I mean, that's what we're seeing is there's so many more of these from the large scale projects, but it's feeding down into the smaller ones. And we're seeing, I don't know if it's the capital raise, but at least some of these big players coming in. And we've talked about some of these companies that have been hammered, they're now almost undervalued, and the smart money is coming back in and hoovering it up. And I mean, I was going through my list, there's what do we have? Future Battery Metals last week. Again, Gina coming in and participating quite a high amount in that capital raise. And there's no shortage of, again, you picture her with a decent sized checkbook really trying to get involved. But this is all across all Australia. And then I haven't even thought about what's happening else around the world. So what else is really exciting you about lithium in particular at the moment?
Yeah, the neurology plays and the juniors are, is quite interesting. That's where your leverage is for us at the end of the day. We're going to go in there and buy a $1 billion stock. Probably not. That's not our end of the market. We're in that for the smaller end. And going back to the Azure one, we've maybe got a little bit lucky with the 4 of our companies that are actually around there. They're originally, looking for copper and nickel and whatnot. And, you've got Green Tech Minerals, you've got Azure Minerals, you've got Raiden Resources, and then we just did a cap raise for Irawara Resources as well. And they're all kind of interconnected in a way, but you look at the trend that Azure are drilling out to their target zones, and, if you're right on the border, it's no different to, I guess, property at the end of the day. If you're in a really ritzy suburb and the next one over and the houses get more expensive, your house has started to go up as well. So, yeah, we've been really lucky in those aspects where a couple of these junior companies have run up, 200, 300, 400% just on the back of being close to that. They haven't drilled or anything like that. They've got good rock chips, but I think going back to your comment about future battery metals and why Gina has gone in there, and I think people are starting to realize that, rock chips are great. There's got to be there, but it's not always from surface either. And what you're finding is a lot of these are stacked pegmatites that are, potentially in Azure's case, 100 to 200 meters down. So, you can do all the surveying you want, but until you put a drill hole in the ground, it's very hard to know whether there is or isn't something down there. So, again, the rock chips give you a good indication, and then you got to do a bit more, surveying along, and make sure that it's worthwhile. But at the end of the day, it does come down to the drill bit talking. So, there's a lot of companies that aren't even at that stage yet, but should they get there, and you got to remember, it's getting the permissions to go out there and drill, and the right season, and getting a rig up out there. There's a lot of things that needs to stack up, but the real hot stuff comes in when they start to do the drilling. So there's a few companies that are getting to that stage where they are going to drill, and that's where the excitement comes in, I guess, and it's make or break.
Well, it's one of those things I'm seeing at least every day, a new company acquiring a lithium asset. And I thought we'd had almost the lithium bubble or the hype train. I know there's no shortage of need for it, but it just feels like there's just this constant flood of companies that are acquiring or restructuring or reallocating resources to really specialize in lithium. And one of the interesting points that we haven't even touched on, and I'm seeing it more, is the oil and gas companies now trying to get a stake, potentially not in the mining, but more in the extraction and chemical side of processing lithium. I mean, what are your thoughts on seeing those players start coming in and almost this new stage of lithium where it's transitioning from, you might have a tenement and a project, but now the potential expertise is coming in. I don't know if the skills will translate, but it's quite an interesting point in time that it's car manufacturers and now potentially the oil and gas or petrol makers coming in as well.
As for the acquisitions, you'll see a lot of junior companies, and it comes down to structure, market cap, cash in the bank, who the major shareholders are, what management. A lot of people will be looking for leverage plays. If something's got a nil market cap or 1 or 2 mil market cap, zero EV, and they go out there and acquire a lithium project, you're going to increase the value of the company, and that's where the market tells us what it's worth. So that's why you're seeing a lot of companies that are, previously doing something else. I was at a presentation for Latin Resources the other couple of weeks ago, and same thing. They've been going for 15 years, and they started off doing multiple different commodities, and only just, in 2019, 2020 did they pick up their project and, eventually made their way from being 1 cent to, 40 odd cents, what they are now, and on a pretty big discovery. So, people think, because the company's down and out and, it's going to zero. But sometimes you've got what you call the shell game where, you'll go in there and you'll get a restructure, and you'll get new management, and it'll be a new idea, because a listed company is always worth something. So there are a lot of people that will go out there and play the shell game in essence. You'll find a new project, hot topic being lithium at the moment, and bang, you're away, and you could be onto something new. So,
and it's sprawling out almost everywhere. And if we go back to your point about, the Australian big dogs almost closing down or getting controlling state, we're seeing that almost in some of the other jurisdictions that have got that, sovereign risk in particular. I mean, Canada hasn't got that, but I was thinking more of that, ongoing Lithium, Mali, and there's a lot of history with that whole project. But I mean, what else are we seeing potentially outside of Australians' boards in the lithium space, or maybe it's not so much the lithium space, other potential materials that are interests?
So there's geopolitical risk there, as you say. Australia, safe jurisdiction, people will eliminate places like South America or Africa because there's a greater jurisdictional risk. And particularly in, I guess Africa and South America at the moment, there are changes in governments, but there are always, mining's been going on in these places for decades, and for decades to come, there'll be mining that goes on there. If you talk about the Mali, situation at the moment, everything was fine until they said, look, we're going to go out there and do, DSO, which, wasn't really in the scope of what they were initially planning. So, it's almost, why would you go outside the scope without discussing it with the government first? Because what you're finding, Zimbabwe is another one where these African countries want you to process in country. And it's actually the same here in WA. What Chris and Gina and that want to do here, they want to process in country. It's a big opportunity to do that. But why are we just selling the raw product and processing it elsewhere? Why don't we do it all here? So because they see the huge opportunity of growing the economy, providing jobs and everything locally. So, you've got to understand that, different African countries have different risks as well. You can't just say, I'm never doing Africa again because, I've made money out of Africa before. and a lot of the countries are really good.
Yeah.
But,
Yeah.
you've just got to
So
finesse.
short-term blips as well that gets everyone quite scared.
Yeah.
We've seen that, well, quite a few, and then it sort of scars people from ever really considering it again. And yeah, as you said, there's so many resources, and if it's not some investors, that China's got massive interest and they're looking at it because there's so much resources there. It's untapped. It's just about figuring out how to do potentially business there.
It's just a tax. It's what you call TIA. This is Africa.
Yeah.
That's what we call it. So, you've got to have that tax on your risk profile. But, the Chinese are in there. The Russians are in there. They're funding all this. So, there is always a market for it. But it just comes down to the investor risk appetite. And, there's always going to be money made out there. It's not going to stop. It's just, no different to market sentiment at the end of the day. And going back to your comment of, the oil and gas guys coming in and getting involved as well, they're not going to turn into hard rock mining companies, but they are going to look at the brine aspect of it because it's very similar. So you were seeing out in the US in particular, you look at the Exxons, the Chevrons and whatnot coming in and going, well, we already do wells, we already do production. These are very similar in nature. How can we expand our current portfolios looking for the future and, get involved in that part of it as well?
Yeah.
So you're seeing a few moves that way. It'll take a little bit longer for them to actually get out there and do. They probably don't have the expertise. And, I think we've spoken previously about the DLE hype and everything like that. There's still nothing proven commercially at scale. There's a few pilot plants and test plants and that going on, but there still are processes out there that enable brine extraction without using ponds. But, people just think it's it's going to be a direct lithium extraction. It's a one-step process. It's not a one-step process. There's hybrids of it, whereas it's a multiple-step process to extract efficiently and without excluding ponds. But, people are expecting this one-stop shop of a DLE, which, it's a pipe dream.
Yeah.
So you will see the more money coming into it, more money is needed to go into it and experiment and move forward. And funnily enough, the price of oil has gone from $70 a barrel to $92, $93 a barrel at the moment. So whilst we've seen some of the companies like Shell, Chevron, Exxon, Occidental, really, really putting out huge profits last year, the price of oil has gone up significantly. So what profits do you think we're going to do this year?
Yeah.
And where are they going to start reinvesting that money? They are going to start looking for the future and go, look, we've got the capital to build brine plants, which are typically CapEx is, can be north of $1 billion US. But for someone that's printing money at a significant rate, to spend $1 to $2 billion on building a viable plant that's going to go for 100 years, then, why wouldn't they use some of that money to really start to narrow down and focus on that?
And they know that's where the hiccup is emerging in a lot of it. We talk about, these projects on time and on budget, and you're sort of armstrong in the fact that they cost a hell of a lot to get up and running, and we're still trying to figure it out. And that's where you look at, we don't necessarily have all the expertise. It's reminiscent of a lot of other bull markets in the past, like with uranium, and everyone wanted to do it, but not everyone knows how to do it. And it's sort of, it's that tight line of, there's always these sentiment-driven bull markets and everyone gets really excited, but then the reality kicks in with, how do you actually take this to the next level or do the lithium processing? And I think that's one of the difficulties with the lithium market is trying to figure out and how to price it all, because we've talked about it, the Chinese spot price coming in and almost being like at least on the top line, people are like, it's going to be easy to now track lithium price and movements. And it's almost the opposite. It's almost harder. There's so many ways to characterize what's happening with lithium, and I think it's not going to evolve very quickly. But what are your thoughts? When people say, it's quite easy to understand the true price of lithium spodumene or some of these others, where do we see this market potentially unfolding if we start with, the China spot price?
Well, I think we've spoken about this. If you look at the volume that goes through on the Chinese spot price, people go there as, when it's an emergency and they don't have any supply locked in. But most people have got supply locked in at the moment, and prices are elevated compared to where the Chinese spot market is. The other risk around the Chinese spot market is you don't know what quality you're getting either. So, let's just use the Inflation Reduction Act as a good template of needing to know where exactly everything comes from that goes into your battery and goes into your car. If you're getting mixed lepidolite with that it's come from not great places at the end of the day, and that's been mixed in and you're getting that into your batteries that are, from buying on the spot price, eventually if you get the tax credit and then it gets found out later via your passport that, you've actually used things that sourced from elsewhere,
Yeah.
you're going to have to start paying that money back to the tax credits that you're getting.
Mm.
So are you going to take the risk on having to potentially pay back X amount of dollars in the future by buying on the Chinese spot market? Or are you just going to pay a premium to go somewhere else, and if you go to Korea and places like that, there's premiums. You don't have to look at Albemarle and SQM statements to see that they're getting premiums to the Chinese spot market. So, I think I hear just about every day on a couple of podcasts, oh, look, the Chinese spot market was down again today.
Yeah.
It's so irrelevant,
Yeah.
You
Exactly. And I think we said there's not enough participation to really warrant massive, I guess, a realization of it, because it really is a price that's been established to try and keep a lid and almost, you could say, manipulate the price point and get people focused on it. But that's where I just see lithium in particular. You can't really put a price tag on where it is and what it is, because there's just so many different variables going into it. And I don't think there's been, and I won't call it a commodity, but a utility such as this that's very difficult to pinpoint how to price it effectively. And we're just seeing this. It's an exciting time, and I keep saying with you, it's like, well, when are we going to, potentially hit this top point? But projections just say that it's going to continue ongoing, and especially in North America now, James Bay has still got plenty of attention, but some of those surrounding areas, I've spoken with a few companies in Quebec and a lot of the other tenements and packages around there. So what do you sort of prophesize potentially happening there, given that they've also got the Inflation Reduction Act, which is always going to be a helpful tailwind for a lot of these companies that are looking to find lithium?
Yeah. Well, you go to North America and you look at all the gigafactories that are being built. There's something like 30 or 40 planned to be built over the next kind of decade. And, where are they going to get their supply from? So, it's like these things require a lot to kind of keep powering pumping out batteries. So, and are they going to keep getting it from South America or Australia or do they want to get it locally? So, North America is going to play a big part in this. But if you look at something like Patriot Battery Metals, which is a huge deposit, it's going to be very good. It's still a long way off getting actually developed and getting something. You're probably looking...
Albemarle do have a stake in that as well.
So they do that.
Yeah.
They took an option in that going, we don't want anybody else going in there, so put in 110 million Canadian.
Yeah.
And, it is a big, you've got Ken Brinson out there running that. You look at PLS and how that turned out. But things take time. So you're looking at, back end of this decade for that to really start having an effect. So, where does the rest of it come from? What's quicker to get online? And you're seeing a jostle out here, you'll start to see a jostle in North America as these mines start to come online and people go, right, I'll take that, because the risk is in the processing and, making sure it's battery grade and building the plant. That's why these big guys just wait. They don't want to go in too early. That they just want to take it at the exact right time that they know it's been de-risked and they can bring it into production themselves. So I think North America is going to play a very important part in the Inflation Reduction Act for sure.
You just mentioned Pilbra before, and that's another company that has had an emphatic rise, and they're sitting on a hell of a lot of cash. And I think a lot of people are trying to, put words in their mouth as to what they're going to potentially do with their checkbook. Or are they, again, a potential takeover target? This is all just speculation from myself, what's going through the markets. But what do you think is going through their minds and some of the true bigger players that are actually starting to make, decent volumes of cash and are sitting on, massive compared to some of the oil and gas companies we talk about, but like a player like Pilbra, what's potentially going through their minds?
I think they're thinking that they've got $3 billion in cash and getting 5% on it. It looks pretty good. Seems like a pretty good strategy at the moment.
Yeah.
They're increasing their resource size as well. So, they're probably just waiting for the right time to do something at the end of the day. They don't want to, they've taken a while to get, they don't want to rush in to do something. And when something makes sense, it'll make sense and they'll act. They're not, they don't have as much money as what Hancock or, MinRes and whatnot have. So they're probably just sitting there waiting, and they just keep increasing their own deposit at the end of the day. So you think about how long the other two companies, have really been around, decades. Yeah. These guys are still, really only starting to get going in the last 5 years. They're probably taking a 5 to 10 to 20 year outlook on what they look like then. So it's not I need to act now. They've still got a pretty big deposit. They're making pretty good money. They'll make strategic decisions that make, fit to them at some particular stage. Do they go out to North America? Maybe. But
Mm.
you'd kind of think that they might just stick to their own backyard, and
Yeah.
there's always plenty of stuff popping up in WA, something that they know,
Mm.
and they're comfortable with. So
So then in the lithium market, who's potentially missing out? Because there's always the naysayers and you could say people that are hedging against the lithium success. And, I think I saw it the other day. There was some hydrogen car, for example, when it's an extremely expensive, completely concept driven, vehicle. But there's also that side of, what's going to, I guess, consume some of the lithium market if you're being the devil's advocate, just saying anti-lithium. I mean, who's missing out in this? And I mean, what other areas potentially are they looking at instead as like their priority, like hydrogen and potentially Twiggy with what he's focused on?
yeah, if you have a look at what all the major banks are saying, about lithium supply and demand, they're all over the shop. Some of them are
Mm,
saying there's oversupply. Some are saying there's undersupply. It's going to come online. So you may as well get a dice and roll it and see which
yeah,
one you land on.
yeah.
And these guys are meant to be the experts, but
Mm,
if you have a look at the analysts that are working on these projections, all they're doing is taking numbers and putting it into a spreadsheet and coming up with new numbers and going, oh, there's going to be an oversupply or an
yeah.
undersupply. None of them would really have, you talk about there's so many lithium experts out there
Mm,
these days. What are we in the second phase of the second run? So since 2019, and what you're seeing is actually a lot of people that have washed up from the first one and failed, and
coming
now they're
back,
coming back
reinvented,
and they're reinvented
rebranded.
themselves,
Yep.
rebranded, spinning the same stuff that they were talking, 5 or 10
Mm,
years ago, and people are just gobbling it up.
yeah. Yeah.
So there's a lot of, people that think they know everything, but how many experts are really out there?
Mm,
How many people have actually built a commercial scale lithium plant?
yes.
There's
Yeah.
not many in the world, in the Western world in particular.
Mm.
So everyone coming out going, yeah, we're going to do this, we're going to grow, and we're going to have all this stuff
It's
working.
great on a PowerPoint presentation.
It's great in a little plant, probably the room the size of this.
Yeah.
Someone's got a little, 1 kilo plant going, but
Mm,
growing that out commercially, finding the experts that know how to deliver this is very, very difficult.
yeah.
So I just don't think these analysts kind of realize, and
Mm,
again, if they're analysts, they've probably been in the industry for 2 or 3 years now.
yeah.
Um,
And I think it's also very easy for them to dispel it, given that they're probably attempting to buy it up, or again, not being 100% authentic and faithful in what they're presenting. Because they might be saying that, yeah, we anticipate lithium supply to be oversupplied this year, but yet they're still accumulating share prices whenever they put these things out, or companies. And it's this weird sort of, if you actually track what they're saying, what they're doing, it's almost two different polar opposites. And you just
yeah.
go, well, why are you doing this? What is with the misdirection, or why are we constantly in this environment where people say one thing and do the other, and it's just this, it's this continuing. I don't know if it's how the market is, and that's why you've got to be clued in with people that are tracking it every single day and
Yeah.
knowing what's happening.
Well, they're separate entities once within the banks anyway, but again, the left hand doesn't always talk to the
Yeah.
right hand at the end of the day. And you'll have the particular parts of the business working on corporate structures and whatnot that'll be helping that arm. And then again, you've got people that give out market commentary. I think
Mm,
the best one probably really is Macquarie. Matt Cap are probably the best in the lithium space. They've just come out with some revised targets, and they don't always get it right.
yeah.
Nobody does. They've done some revised down targets recently. So yeah, I think you've just got to really grind down into who's actually giving this commentary, and what are their angles. There's too many angles out there. At the end of the
Mm,
day, it's just people are just throwing darts in the infancy of a market that's going to be going on for decades to come,
yeah.
and people are only just trying to figure out what it all actually means. So
Mm,
there's just so many opinions out there that are again clutching at straws, I
yeah.
think.
Yeah.
And not, I'm
and
not
then,
I'm not
yeah.
saying I'm
No,
I'm
not saying you're
Mr.
expert.
Expert or anything like that, but
Mm,
there's a lot of fluff out there, and there's
yeah.
a lot of you know people making decisions and
Mm,
making statements that are factually incorrect. And do they influence the market? Sure.
yeah.
But that's it's life.
Yeah.
Who's missing out at the end of the day?
Mm,
I guess BHP said they're not really going to get into it. They don't see a long-term issue. There's plenty of lithium out there, and they're staying out of it.
mm,
So they're the ones that are missing out at the moment. But I think they've just made too many errors in the past to kind of really jump in and go, oh, we're going to buy this oil field out in the US, but
yeah.
by the way, we're going to write it down 6
Mm,
years later for a $15 billion loss or whatever, or the coal that they did in Africa. So,
mm,
BHP are notorious for, jumping in and buying things on a hype. and then writing it down for zero because they bought at the top of the market. So
Yeah.
they're the ones missing out. What are other people trading? There's been a spike in the uranium price of late.
Yes,
It's
true
gone from
this.
about 50 to 65 plus sort of thing. People are starting to realize as coal power shut down and wind farms and solar don't really provide enough electricity that we're wanting. Do we have to go nuclear again? It's more than likely. There's a few disruptions in Africa regarding supply.
Yep.
So that's having an impact, and there just seems to be a bit of a. I mean, you'll find some uranium bulls that have been bulls for 8 years, and they've been saying the same thing, and now they're having their day in the sun, and it's, oh my God, I'm finally right. If you keep going for long enough, you're going to be right at some point in life, I guess.
Exactly.
So.
What is it? A broken clock is still right twice a day. Yeah,
Correct.
That sort of metric. Yeah, but I mean, the uranium I've always been a fan of because I've had a few conversations. It always jumps back to my conversation with John Borshoff that the new renewable energy phase that we're just accelerating to and almost just adopting hand over fist. It's almost a large-scale experiment with a lot of these electric vehicles coming online. We don't actually have a lot of understanding about whole system on a global scale. It's a great idea and a great concept, but the proven energy sources we have are very, very useful, and we're sort of just we want to get there, but in reality, are we going to be able to execute it? And nuclear is one of those conversations that now suddenly is, well, hey, this has to be considered. And of course, uranium, there's no shortage and no abundance of it. And yeah, there's plenty of it. It's just about, again, that expertise and the good quality projects. And of course, there's been such an underdevelopment in mine development that we're at this looming period of time where, well, yeah, what's going to happen? Where are we going to get these uranium mines coming online? And that's another, 10 to 15 year development.
They're shutting them down at the end of the day. So they're shutting them down and then going, oh, wait, we probably shouldn't have done that. So, we're seeing a supply, gap for demand and, what's out there at the moment, which is why you're seeing a significant increase in the price, significant increase in all the developers at the moment that are kind of nearing production. You'll notice that all these guys that have never been able to get $1 for the last 2 or 3 years are now doing, I think there was 3 today in the uranium sector. I think there's been 5 or so in the last kind of week where they're going caps out, going time to get into the market. So, you've got to be very wary of, valuations and whether these things are actually going to get into production. And, again, there's no different to the lithium. It's a very difficult sort of thing to bring out.
Yes.
And everybody wants to mine it. Nobody wants the waste from mining it. So you've got to also, Australia's going, no, we're not going to do uranium. It's just not for us. But I mean, BHP's still doing it down at Olympic Dam, and their profits will be probably a lot more significant going on the next quarter or two, which they weren't expecting. So typically Africa is the best place for uranium, and it's just about finding the right companies with the right valuations and what phase they are. Everyone's in the Athabasca Basin in Canada. It's expensive. It's very hard to get people and to get rigs or anything like that. So the money just goes, in an instant. So how much money have you got really these junior companies to pour in there? Which is why, Africa is probably a better place for uranium at the moment. There's a lot of producing mines in Africa. You still have your TIA, this is Africa risk tax. But there are companies out there that'll, go on this next run and you'll make money from. No different to lithium. It's all sentiment driven. Once the sentiment comes in, things start to run. I mean, look at just talking about general capital markets, you look at the SoftBank ARM IPO on the NASDAQ last week, priced at the top of the range, still rallied 25% on day one. That's capped at $65 billion. And SoftBank come out and said they're looking at, artificial intelligence deals that are,
everyone's saying artificial intelligence.
It's a lot of it comes down to sentiment in the junior end of the market. We've always said that if investor sentiment's there, then it'll work. No one's doing medical cannabis at the moment. No one's doing mortgages or anything. Like you look at Mark Boris and he's delisting from the ASX. So there's companies that are delisting because
it's just not for them now.
They just shouldn't have enlisted companies in the first place. At the end of the day, there's a lot of companies that are just like, yeah, you know what? We probably shouldn't have listed. That was a good one. A lady did I think it was a height of the COVID pandemic, and I think she got 17 million for a wellness. I can't remember what it was called. Isn't the AFR today? 17 million, but it was all tied up in equity and, escrowed for a couple of years. And I think her $17 million that she was glorified for making in her exit strategy is now worth like $650,000.
It's like an NFT.
Yeah, it's like the biggest short ever.
Oh my.
So, that's the capital market space is always going to be sentiment driven at the end of the day. And, we are seeing the VIX low, and there are, the right companies, as we say, picking up lithium or rare earths or uranium, structure, people, management, money. And sometimes you've just got to get a bit of luck on your side at the end of the day. That's the world that we operate in.
Yeah, so looking forward, I've spoken with a few, and I haven't spoken with US commentators in a while, but some of them are very much putting out the idea that we're approaching this fear period. I mean, maybe they've got their US conditions influencing their decisions, but the next 6 to 12 months, or maybe just even until the end of this year, because this year has flown by, I mean, what do you really expect to see? I mean, the RBA, what are our thoughts on that, and just general market sentiment as we sort of progress towards, the Christmas and New Year celebrations of people being, hey, lithium raced away again, but what did we miss? Looking back, was it definitely a better year than 2022? But what are we seeing driving potentially happening there?
The market's always forward looking at the end of the day. So they're looking, 1, 2, 3, 5 years in advance. So they're not worried really. The short-term investor is obviously worried about what's happening 6 months down. Yeah. But, the bigger end of town's always more forward looking. Have we peaked at rates? I don't know. It's hard to say. We're going to get some skewed data on inflation figures because the price of oil's gone up. Housing keeps going up, particularly in Australia. So what does the RBA do? I don't know. They're in a pretty tough spot. They've got to support the Aussie dollar as well, which is in free fall. Was very noticeable when I was traveling around Europe.
It wasn't getting you as far.
It wasn't getting me as far. So, it's hard to say where it goes. Rates will definitely be higher for longer because the inflation data is not tracking completely down to the target rate of 2 to 3%. The US might be in the same position as well. So that makes things a little bit more tricky. Does the RBA protect the Aussie dollar? What do they do? What does the US do? They've got big cliff of debt kind of coming up as well.
They'll just increase it again.
They'll increase it.
Perpetually do.
They've got an election coming up. Election years are typically pretty tough for markets. People don't like risks, so they, start to ease back a little bit. But then, you've also got, if they do start to, take interest rates down slightly, you start to see a tailwind of money starting to come out of cash and, looking forward and going, well, if interest rates are going to be down in 3 years' time, I'm going to deploy some of that money now, knowing that equities are going to rise and, we'll start to see better yields on listed equities. So it'll be a natural flow. I just don't think it's going to happen straight away.
Yeah.
The VIX is something I always track every day.
Yeah.
It hasn't really been above 20 for a while, so it's been a very good period for the small end of the market. I think it's been 3.7 years since COVID.
Oh, wow. Yeah.
And for the ASX, we've gone 1.4% up. So it's kind of been 4 years of sideways movement, really. We haven't really broken out. So if you look at the NASDAQ's up 34% this year as well. So our market's a little bit, just trending sideways and trailing. We should get a tailwind if they start cutting rates in the US. A weaker US dollar is probably good for us. We'll start to see a run, but we're just kind of trending sideways at the moment, which isn't a bad thing. It'd be nice to see a bit of a bull market, but also at the same time, the junior end of market has had very good wins. You're seeing companies that, are coming out with spectacular results and, finding discoveries and whatnot. So
it's
more concentrated, you know what I mean? Like during 21, 22, everything was running. You could, companies were picking up this and they were running 200, 300, 400%. Whereas now it's more centric on a particular stock in a particular, area, which is what's been, kind of fueling the runs in companies where people have been getting wins at the moment. The Azure, Green Tech, ERW, Raiden, Artemis, that's a particular area where companies were, I think Raiden was trading at 0.3 doing a rights issue down there and they hit 4 cents within 2 months.
Yeah.
So it's just more centric on particular areas rather than absolutely everything running at the moment. You could throw darts and you're like, why is this thing running? No idea. But the traders were in there. All that free money is now, gone out the market.
Yep.
And it's probably a good thing at the end of the day.
Yep.
It was just crazy. Great times for traders and whatnot, and great times for brokers. But was it really a sustainable model? No, I think you've probably found a lot of people that were punting in the market, aren't punting in the market now. They've deleted their CommSec app and gone, you know what, this probably isn't for me.
Yeah, I can't handle it.
I can't handle the emotional roller coaster of, investing in stocks. And a lot of people probably cray-potted in a lot of stocks as well. They bought, they're liquid, they're not doing anything, they can't raise any more money, and then they're going, oh, I'm stuck. What do I do now? So a lot of people are probably just sitting there holding stocks that they don't want to be holding, but you're stuck in a lobster pot, so you're kind of staying there.
Yeah, I mean, I saw a trailer recently for a GameStop movie coming out, pretty much, and I was like, oh yeah, thinking of how long ago that was. They're doing a complete, I guess, real life adaptation of what happened in that bubble and that insane reaction to a company that should have never been valued that much. But this whole, we're sticking it to the corporate world. It was the complete opposite. Like, corporates arguably made more money and did the smarter thing out of all of that in the end. But at the end of the day, it was just the average punter that ended up getting screwed and thinking they were well too smart. But that's burnt a lot of people. And it's going to be an interesting thing, seeing a lot of these companies almost reward shareholders' faith. It's not everyone, but some of them are definitely proving that they did have something. It was just, you just had to be a little bit patient. And we've almost lost that a little bit in this sort of new age demographic of investing. There's just not that patience to hang around. It's, I want it up in 3, 4, 5 weeks. Otherwise I'm out. And it's just, we've lost that ability. Maybe it's, again, the lack of research and just general, knowledge and hearing the right advice. But it's going to be a very interesting period of time seeing that, there's been, these companies have had these incredible uncovered or resources discoveries, and they're just racing away, and people are like, well, God, like, how did I miss this? It's like, well, I've been there in the entire time. You just need a little bit of patience.
And a good broker.
And
I might know one.
No, this has been fantastic, Keith. And I love picking your brain about what's been happening. And I can imagine when you were away, you'll probably still glued to your phone, having a little bit of fun, but also watching all of this unfold, because it's just, and you can never really turn away from it. And that's why I encourage people to always just reach out, ask people, very friendly, almost across all boards of social media nowadays. But for people that want to naturally learn more and follow yourself and get in touch with CPS Capital, I mean, where can they go and how can they access that?
Yeah, I mean, you can see us on LinkedIn, Twitter, go to our website. You can send, you can send in a request, and one of our team will kind of reach out to you and help you out. So yeah, always, we're always active. We're always doing things, always taking on new clients. It's been pretty busy of late. You're only as good as your last deal at the end of the day. Luckily, we've done a couple of good ones recently. So yeah, it's just, stick with it. At the end of the day, it's not overnight success, but sometimes you just have to play the game.
Yeah. No, it's good to have you back, and I'm looking forward to speak with you again in the coming month to see what's been sort of progressing. But yeah, thank you so much for speaking on the show today.
There'll be another takeover or something like that that goes through.
Yeah, within the next
maybe in one of my stocks. So we'll see.
That's what everyone's touching wood for that. But that was awesome. Cheers, Kate.
No worries. Thanks, man.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.